Okay, got to bring all this into view. Don't pay attention to the missing ceiling tiles back there. I am constructing a light, a massive pool table light, and so I need to get access to all the electrical. How you doing, folks? Today, Monday. What is today? Is today the 6th, 7th, 8th? Today is the 8th? Oh my God. Man, how time flies. Yeah. Let me just double check that, make sure. Monday, the 8th, June 8th. Amazing. You know, this Saturday, we're going to have another asymmetric advisory newsletter webinar to talk about this incredible turn of events that's happening in the U.S. markets. Oh, I wasn't really looking at you, was I? This really incredible turn of events and the divergence from what most analysts are talking about and what is actually happening. When I say analysts, I'm talking about the mainstream analysts that you would find on CNBC, Bloomberg, etc., and then also the pundits that you would find that are usually, they're a one-trick pony. Dollars collapsing, economic collapse, hyperinflation, blah, 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 blah. Just on and on. Then there are some of the others like Marin Katusa who are also predicting that there is an underlying current, but never really identifies what is that underlying thing that just seems like there's no way for us to come back. But he even admits that the U.S. economy, if anything, when their back is against the wall, will figure out a way. Now, what all the analysts are ignoring, all of them, all of the analysts are ignoring this. Very, very, very important factor. And that is that this economic downturn was not the result of some churning economy over time and then it just started to fall off the cliff and we couldn't hang on and bad report after bad report and it just sort of all piled on and people were losing their jobs and then it just fell into it wasn't that at all. We chose to bring this economy down. We literally turned the lights off. Why is nobody talking about that particular dynamic? It's because they don't understand it. Nobody understands it, apparently. But it's different. It is different than, some coursing bad blood flowing through the economy that eventually kind of eats away at it and deteriorates it. That's not what happened. It's not what happened at all. What happened was, like I said before, we turned off the lights. We literally turned off the lights and then went home, stayed home for more than 2 months. It was a self-imposed industry shutdown, self-imposed layoffs, whatever. People did this. Of course, most people didn't want to do this. A lot of people couldn't afford to do this, but they did it anyways for their supposed safety from the pandemic, which apparently has been cured by race riots. Well, we'll see what the actual outcome of that is in maybe even now, considering that the riot started a little over almost 2 weeks ago. We should start seeing now if in fact all these people coming out of quarantine and ignoring all the social distancing and all this other crap are now commingling, as close as you could possibly imagine. Even the World Health Organization said that this kind of non-social distancing is okay because it's in, I guess you do the calculation, you do the math, you do the calculus. You say, well, having the economy shut down and suicide rates go up, spousal abuse go up, child abuse go up, mental health problems out the yin yang, people unable to go to the hospital for, needed procedures, economic downturn, losing jobs, huge scar. That is enough. That is worth the risk. But rioting for some thug is not worth the risk. We must do that. COVID be gone. Let there be riots. Man, if you're not questioning that, then I just don't know how to reach you. All right. So one of the other things that's happened recently is we saw that the dollar came down sharply over the last week. And people are now talking about that as being the next nail in the coffin. It's the thing that is going to just plunge this market into, it's funny though, the dollar went down, but gold didn't really go up now, did it? Let's see here. Check out gold. Did gold? Not really. Gold didn't go up at all. It went down. What the hell? You're probably saying, what are you looking at, Ernie? I'll show you what I'm looking at. To the charts. All right, this is the gold futures. And we have about 2 years of data here, so that's an awful lot of data. So let's kind of spread this out so you can see just this past year. And we'll auto it. Okay. So here's gold. Now let's take a look at the dollar in the same kind of time frame. In the same time frame, the dollar. Sorry, I should have had this all set up. But the dollar, plunge, 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 plunge. All right, over several days. And then we'll compare that to gold, which also plunge, 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 plunge. Well, it went down, 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 up, down, 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 up, but generally down. So gold is not reacting that much to the dollar. As a matter of fact, it is pretty much staying in line with it. Some might argue neutral, but here we're just sort of dancing in this channel with gold. And as I've said in my big picture analysis of gold, you got to look out for this level here at approximately 1750. Right at almost the top of this channel, 1750 to, I don't know, 1780. I have this line here. What is this line? And I have this thing here. This is sort of a range that I'm putting in here, saying that this range represents kind of no man's land. We'd have to get above that. And more specifically, I was looking for getting above 1750, which is right about there. If we had any chance of gold making it out of this and breaking out. Now, gold, of course, would be the thing that would hedge against inflation. You would expect if inflation were really here, gold would be going up. But the fact is that gold is not going up. And the other fact is that we do not have inflation, despite the fact that we're pumping all of this money into the economy. And I've talked about this last week as well. So I'm not going to go over it in ad nauseum again. So the dollar falling apparently isn't that big of a deal. I mean, we've fallen before and we've propped right back up. I mean, these are normal in-goes, out-goes. I think, the dollar following is, probably reacting to the strong economy, I guess. There's a lot of reasons for it. But I can expect that this dollar is also going to rise very soon and will fall back into that kind of dollar milkshake theory. Um, but before I go on, make sure that you like this video, leave a comment, and subscribe. Thank you. Thank you very much. So the dollar isn't plunging. The dollar isn't falling off of a cliff. When you look at it in the bigger picture, this is not a big move. It is still relatively where it has been for the past 2 years, or for the past year and a half. Anyways. So I am not looking at the dollar as being in any particular trouble here. As a matter of fact, I think that the dollar will experience tremendous safety and growth. I mean, this is what most countries that are also experiencing something similar to the United States, and they're looking for our leadership to get out of this pandemic. And they are also rioting. So apparently that is rioting is the cure. It's kind of like going to war, right? But except for in rioting, you're not buying any military equipment. What are you spending money on when you go and riot? I guess repair. You know, you got to rebuild. Now there is a way to create some inflation. Think about that. Right now, without people fully back to work, although last weekend we see that 7.5, 9 million people went back to work. They were rehired. Although there is still another, 20 million that are out of work. They will eventually not all of them, but a good portion of them go back to work. There's going to be some restructuring. There's companies that have gone out of business for good. There are others that have managed to hold on by the skin of their teeth through furloughs and forgiveness. And because everybody knows that we're in this, and it's probably true that the companies that couldn't survive probably should have gone anyways, In the past, we always were under this delusion that we have to prop everything up, that everything, nothing can fail. And this was one of the problems with past economies, that we tried to prop everything up all the time, that it didn't give us a chance to churn and rebuild, destroy, rebuild, create a more robust economy. But maybe this kind of forced the hand, forced the weak players out. And now people need to get back to work. What happens with those jobs that are permanently gone? Well, I believe that there's going to be more jobs in the reconstruction. There's probably going to be some shovel-ready jobs provided by the government, but I wouldn't count that as necessarily a boom to this economy. There's certainly going to be an adjustment on our global supply chains. We will be domesticating a lot of those. That's going to create jobs too. This new industry, new jobs, new businesses being created, the fixing up of those things that were destroyed by the rioters. Thank you, rioters. You helped fix our economy in a very strange way. That will all help solve the deflationary issues that we have right now. We could probably stand another round or two of stimulus, even another $1 trillion. It's going to barely fill that deflationary hole. So this is the reason why gold isn't going up. Gold isn't going up because there is no inflation. Simple as that. Gold isn't going up because there is no inflation. There's deflation, as a matter of fact, and it's going to take us a little while to fill that void, to pump it up, so to speak. And that's probably something that we can manage. And I think it's also a fundamental misunderstanding of what the reality on the ground is for the economy. People want to get back to work. They want to do away with these riots and put them behind us. They want to come together. They want to provide. there's still a lot of political turmoil to work through, and that's I don't know exactly how all that's going to work its way out. But when we start looking at the well, we'll get beyond the gold and the dollar, right? Stocks haven't been a problem. Stocks have not been a problem at all. The stocks are up there. And one of the reasons the stocks are up there is that there's cheap money, and there's also, at least reflected in the lending of that money, the idea that future money is going to be worth more. Now, what does that mean? Here we're talking about the yield curve. We are finding ourselves in one of the strongest contangos, or I should say, positive steepened yield curve that we've seen for 3.5 years. And let me show you that. Just a second. Go back to the charts. All right. So what I've done is I've plotted out 3 different yield curves at 3 different points in time. The first one is the blue one. The blue one was from the beginning of the Trump presidency. You can see very, very flat, kind of flat, right? Now, since then, it has moved all over the place, but generally, it before the pandemic started, and that's what this March yield curve is, well, before the effects of the pandemic to the economy started, we started to steepen a little bit. That actually is showing, even though it's slight, is showing strength in the economy and confidence in a future outlook, where longer-term interest rates, which are here on the right-hand side, are higher than lower short-term. So short-term lending is cheap. Longer-term lending is showing value. That's what that's showing. That is the sign of a healthy economy. Now, a lot of people were talking about a flattened yield curve, which was kind of happening before Trump took office, and maybe even a little bit into that situation. But now you'll see that there's a huge difference between just March and then today in June, from this orange line to this green line. It made a parallel shift. Everything went down, where interest rates were just cut right out. But the interesting part about this is that while short-term rates have come down to near zero, which is good, the long-term rates have stayed elevated, and that's extremely positive. And the steepness of this curve is much steeper than even it was at just 3 months ago. All right, that, my friends, is super significant, extremely significant. We have a steep yield curve. That steep yield curve is showing underlying systemic optimism in our economy. Now, you may find that just unbelievable, dismayed. How can that be, Ernie, with all these people out of work? See, the market is not a reflection of what things are today. It is a reflection of the sentiment it believes where things will be in the future. That future could be tomorrow, 3 months, maybe 6 months from now. Generally, it's somewhere in between there. The collective consciousness of the world is looking out 3 to 6 months saying, hey, we think things are going to get better. And therefore, the lending and investment in debt is reflecting that. It is reflecting that. This is a very, very strong measure here. Very strong. People are going to come back to work. I think we're going to find that even after the rioting, we're going to find that it's probably not going to be that big of a resurgence in COVID-19. However, people will try to convince you that there is. They will convince you that we need to defund the police. That is going nowhere, by the way. Defunding the police. These are all psyops that are being done by the leftists that are trying to create some kind of insurrection in this economy, taking the pandemic and then the race riots, and using it to their best ability to topple this government. It is just really a sad sight. And what's even more sad is the complicity, the compliance, the lockstep of some leftist politicians and the mainstream media, and of course, Hollywood. All of this working against us. I mean, man, what has this country... I just don't know how to express how saddened I am by that these events. That there are people out there that really want to see that have totally embraced the ideas and tenets of socialism. They may just get what they want, and then they're going to repent. Oh man. So, anyways, that's the overall outlook of the economy. And before I go back to my big head, please like this video, hit a like, leave a comment. Leave a comment in the live chat right now and subscribe. Make sure you hit that notification bell so that you get updated or notified when I put out another video. So, how are we dealing? How are we dealing with this economic turmoil? Well, we're being smart about it. We're looking at natural resources. We looked at when the economy and the stock market went down to the March 23rd, I think, was the ultimate low. It got way down. It was about 33% off of its highs. Now I believe the NASDAQ is creating new highs, believe it or not, even though we still have 20 million people out of work. The Dow and the S&P are about to break out again. Made huge advances when we got this incredibly positive report, employment report last week. And I'm looking at the market right now, and it still looks strong. It's consolidating a bit after this just meteoric rise on Friday, and it looks like it's going up again. and you know, a lot of you are probably just caught like deer in the headlights. What the hell do I do? Should I be shorting this market? Should I be listening to the pundits? Do they really know what's going on? I'm not saying that I know what's going on. I'm just looking at what is obvious. What is obvious is that they don't know what's going on, because all of their prognostications, predictions, analysis have been wrong. Just flat out wrong. Now, again, I'm not saying that I am right, but when you look, I want to show you something. When you look at this chart here, I drew this a few weeks back. Now, a few weeks back, and just to show you that I drew this a few weeks back, we can go to Trading View. The Trading View, here it is. So here's my Trading View account. Here I am. There's my head. I have it under the Pattern Cast name, so if you're ever looking for my Trading View account and the ideas that I post. And we can go all the way back here. Of course, here's my prediction for gold, which is starting to come true. And back in mid-May, where I was talking about these... Here, we'll zoom in on this. Where everyone was talking about the triple top and that we were going to plunge, I provided two scenarios, and I said down here that most people look at a bearish reversal. I favor the no triple top. All right, so in other words, I favor this move here. All right, so if we go back, nothing's working here. Ideas published. So, as you can see, this upward motion is what I've had all along. Now, if we go back to and then go forward, actually, to our most recent, I see back here in late May, I was just totally just dumped the other idea and said we're going up. But look at this most recent, all right? It started to climb. This was about a week ago, June 4th. Oh, not a week ago, 2 days ago. I said, we're going to be coming up here to 3220. Well, let's advance to today. And we can see that we hit that exact mark. All right. All of this move, I predicted. Now, I'm sure some of you have seen me do volume profile before, volume profile analysis. And many people saw after the bubble burst on Bitcoin, and I did the analysis throughout that entire thing and mapped out the entire almost 2 years of Bitcoin, often 3 to 4 months in advance. And now here I am doing that with the market, just to prove to you that volume profile, looking at the actual supply-demand equation in the market, is the most effective way to analyze the market. And I offer this type of education if you're interested. But more importantly, how are we taking advantage of this market right now? We're going to go back to the headshot again, to the big head. And again, I want to ask that you subscribe, like this video, leave a comment, and subscribe. That would be very good. Thank you very much. Every time I switch back and forth, that comes on. So I'm sorry about that. But how else can I get you to like this video? Other than putting out this great content. Now, let me just say, we are doing certain things here behind the scenes. And as you see right here, right there, this is my branding here for the Asymmetric Advisor. That's a new site that I've created. It's been in existence now for about almost 3 months. And we're focused on natural resources. I started this just before the market dropped and plunged. Now, I didn't know the market was going to drop and plunge. However, I saw, some really good opportunities here to start looking at natural resources and their natural boom and bust cycles, and start looking at longer-term investment, create recession-proof portfolios. That's what I've been doing. That's what I've been working on. And we've had several picks since we started the newsletter. We just had our last webinar this past weekend. Fantastic. We're starting to get into uranium now. We've gotten into gold miners, exploratory, oil companies, pipeline companies, e-gaming, cannabis, and it is going really, really well. I mean, so far, although 3 months doesn't say a track record, but we're already up in triple digits in our accounts, in our picks. So that says something. And if you're interested, go to the asymmetricadvisor.com and then join us. There's a link down below, too. I think that it is probably the best way to play this market today. With the uncertainty of stocks and where in the stock market where it's going, although it looks like it's just going to go to the moon, it's got to slow down sooner or later. The reality has to settle in that we're still building, that it's going to take some doing. But I'll tell you, if we get above those all-time highs, I see us really just taking off. And that'll be very positive for Trump, I'm sure. So let's see. True Contrarian says, I reckon Druckenmiller belatedly agrees with your VA. Of course, everyone has to agree with it belatedly because everything that I've been predicting has come out to be true. Sorry to say, but it just has. Let's see. Hayseed has been commenting. Anybody, please go to the chat and comment on this market. I'm more than happy to take up your questions. Renee Frank, and a push to the economy is the backlog in the constructions, painters, and any handyman. They're probably working 12 hours a day now to catch up with the outstanding jobs, may even employ more workers. Well, yeah, and that's, exactly right. So when you just sit back and do nothing, a lot of work piles up, lots of work. When you then compound that with rioting and complete destruction of cities, a tremendous amount of work piles up. Now, I'm not so sure that those rioters are going to be going back to work, but for sure, there is going to be plenty of laborers and other people that are going to fix all that so that the people that work in those offices and storefronts can go back to work and start selling their stuff. Ed Carter says that construction did not stop in his area, and that's true. There was one of those few, the peaceful protesters, right? The peaceful protesters with bricks in hand. Yes, they were all into the rebuilding effort, right? No. All those bricks and stones were deposited on the street corners so that they could pick them up. This was a well-coordinated effort, by the way, by the anarchists, the Antifa crowd, the Black Lives Matters crowd, even though they've now been given the golden seal of approval by our media. They are 100% the same as Antifa. And although the media will not admit that, and it's not politically correct to say so, it is just simply the truth. But anyways, they were not using those bricks to repair. They were using it to destroy, to knock out windows and so forth. It was just really, really a sad situation. A lot of people were hurt, and that's getting underreported too. So Hayseed says, reward work. Yes, reward something to move the earth humanoid to build upwards and outwards and inwards and sidewards. Yes. So yes, the country is coming back to work. I truly believe that. The American spirit is there. You know what's the next thing? The next big thing, and I know that I'm trying not to make this political, but I think that there's certainly a large part of the left, not all the left, but these leftists that have taken over their party. There's this good and evil thing. There is no doubt that these people on the far left, whether they're delusioned or not, are skating and working with and dancing with the devil. The rest of the country just wants to move forward and have good life. Now, one thing that I think is going to come back, and this is going to be crazy, and I think this will drive the leftists crazy, it'll drive the media crazy, and that is Trump rallies. I think that those are going to come back. That'll just drive them insane. Now, if you think that the rioting and all that stuff is over, even though it's dying down, think again. I guarantee you there's going to be at least one more incident this summer, maybe two, that they're going to try to bring this economy down. And don't mistake it. Besides the fact that we voluntarily brought the economy down, that we turned out the lights, there are those that want to keep it down. They literally want to destroy it, and then as a consequence, you. They want to destroy you and everything that you stand for. That's why I said that there is an element of evil here. As much as our friends on the left don't want to admit it, they've got to realize that the people on the far left are evil. I'm sure that there are people on the far right that are also pretty bad too, but I haven't seen them yet join into this fight. Although there's reports that they have. I haven't seen any confirmation of that. Because let's face it. Anybody on those extremes are working outside the bounds of humanity. All right. Drew Contrarian thinks that they've handed Trump a second term. We ain't seen the worst of them yet. No, I really do believe that they are going to come with, second wave pandemic. Then there will be some other calamity that will prop up that will force them to riot again. And of course, everything will be Trump's fault. And the more they do this, the more the rational and sane people, both on the left and the right, are starting to realize how tiresome this is. That these people are not part of the mainstream. However, they wield big sticks and they're doing everything in their power to disrupt, to create an insurrection. And they've been doing it now, including people that are in government, been doing it now for the entire presidency, even before the presidency started of Trump. Really crazy. But how are we dealing with all that? Well, we keep a good close eye on the geopolitical and macroeconomic situation. We are getting involved in the investment of natural resources and anything else that can give us an asymmetric opportunity. And I'll say it one more time: if you're interested in creating a portfolio that will be recession proof, so the next time one of these calamities happen, that you're going to be safe, that your portfolio has a better chance of actually making money than going down, or you're interested in longer term investing and speculating, and making picks that are very well thought out and reasoned, that are already showing a fantastic return. And I'm patterning this off of something that I've been looking at for quite some time. This is a solid way of investing, and it's very easy when you start looking at these boom and bust cycles. We can make money whether the market goes up or goes down. Join the Asymmetric Advisor. It's one of the better things that I've done. I'm also going to recommend that you look at the volume profile replay course that I have for $39. You'll learn how to do the kind of analysis that I've showed you here. And I'm considering a live course on that again. So tell me if that's something that you'd be interested in. Ed Carter says, with money supply so high and supply chains still not up to provide supply, demand, blah, 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 do you think money moving into the stock market is anticipated an increase in flow? No. We have some liquidity, but we don't have that much. We still have a huge number of people out of work. We still have businesses that need to be rebuilt. In that is, we're more threatened by deflation than inflation right now, Ed. Much more. It's not even close. And so those people that are talking inflation, they're talking out their ass. They don't know what they're talking about. We are being threatened right now with deflation. And the only way out of it is for us to get back to work and to start bringing this and propping up this economy again and start rebuilding. And even that is going to be a hard job just to get up back to even, right? So inflation isn't something that you have to worry about until, I don't know, maybe 2 years out, a year and a half, 2 years out. It's not an issue right now. Now, and who knows what happens in 2 years? Maybe we figure out a way to stem that tide as well. But it's certainly not happening now. There's just no way. And anybody that's telling you that we're in danger of experiencing hyperinflation, they just are not looking at the reality. They're not looking at what's actually happening. All right. I am done. I am so done. And I want to thank everybody for joining. Please hit that like button. Smash that like button. Subscribe if you're not already subscribed. Make sure you share this video out too. And then comment. Really. Let's build this channel up. We've got a lot of stuff that I want to bring to you that I think is super valuable. I think the Asymmetric Advisor is perhaps one of the best pieces of work that I've ever done. and I plan on putting all my effort into it. It's a fantastic group. We're about 3 months old. We have currently have about a little over 70 members. I'm only taking on a small number of people each webinar that I do. I only take on about 10, and that's it. I limit it to 10. And then we're bringing those people on there. We have a private chat group, a private Discord. It's a fantastic group. We're making money. That's the big thing. And I do occasionally put some of the trades out there to the public Discord, which is the Trader of Futures server, Discord server. And so you see what's going on there. All right. Thank you very much, everybody. Thank you for showing up here. Thank you for your patience. Thank you for your support. And now is the time to say goodbye. And we'll see you next video. I plan on putting out another video later today. I'll be doing some volume profile analysis of these markets and Bitcoin. Thank you very much. We'll see you next time.